Good evening. This is Ken Long from Tortoise Capital. This is a quick case study in using the daily report for the regression line fractal framework to take a look at the kinds of charts that strategy or that style will steer you towards. So we're looking at close of the market on June 18th, 2014. It says 19 here because it's after midnight in Kansas. But we're really looking at the close at 6:18. On page 1, we've got a number of practical setups in the swing trade generator. But what I want to do is fast forward to page, well, here's the cover page. I'm really going to go look at page 5, the auto framer and regression line fractal format. So we're going to quickly zoom through the tactical summary, the ETF tactical summary, and then arrive at the auto framer and the RLFF page. Oops, excuse me. So we're just going to take a look at the Dow here for the regression line fractal framework. And the top 5 are symbols that have a positive reward to risk ratio. What that means is their price is below the 270 regression line, and that's how many ATRs it is for it to get back to the regression line as the long-term trend. And then these 26 through 30, these are at the other end of the extreme. So Chevron has a negative 8.55 reward to risk, and that's based on a move back to the 270. So Chevron has moved out above its long-term trend, and it's 8.5 ATRs above that trend. So in both cases, what we're interested in is the possibility of playing for an extreme move from an extreme condition. That extreme move could continue to go in the same direction that it's going. In other words, the move that made it extreme could get extremer, or it could be a reversion back to the long-term mean, and we would use the regression line 270 as the proxy for that. So let's take a look at the ones that are below the regression line. So that's Visa, Pfizer, Bank of America, Nike, and United Technologies. So let's look at Visa. So this is the move from the regression line 10 back to the 270. That'd be a move from about 211 to 224. Double bottoms in place. The 30 is above the 90. The 90 has stopped its stall and is starting to improve. So that's Visa. Now we'll look at Pfizer and Boeing. Pfizer, you probably like that a little better. Bottoms in place. The 30 is still sloping up. The 10 is sloping up. Positive price action. We're looking for a move from 29.50 to 31.50. So that's about a 7% move available if it continues to follow through. So next up, Boeing. Continuing to fail. This is one where if it continued to fail below about 132, you would have no hesitation in shorting this one because the trend is down, and you have targets at 129.5, 127, and 122. So from extreme conditions come extreme results. This is a nice favorable reward to risk if it comes back to the 270. But if it fails, we have a critical state trade to the downside. And we'll look at UTX. Market generally sloping up. The mule train is pulling north. We've had a low, a higher low, starting to resume. a nice move from 116 to 121 is available. So these all frame out at, let's see here. These all frame out at better than 3 to 1, and in the case of Visa, 6 to 1. All right, so let's take a look at the front runners here. Now we've got a bull quiet market, and Fed had an announcement that was a non-announcement today, and the indexes and the inverse volatility both spiked up. So we might be interested in the relative strength leaders. So Chevron, Travelers, and Cisco. So let's look at those first. Chevron, what's not to love? And if we went back a little further, you have to love this. This is an all-time high. Off we go. 8.5 ATRs above and on the move. So Travelers and Cisco are next. Same thing. We have a nice upward twist. This is where price, the regression lines, and the 270 crossed its own little Bollinger Band here and now to the upside. That looks favorable. And looking back through deep history, all-time new high. Have to love that. Yeah, let's try Cisco. Tactical trade stabilizing here. This one I think you can frame in either direction. It's really got to get above 25 to be convincing, but a failure here at 24.5 finds 24 even pretty quickly, gets back here to 23.5, and then support at 23, and then the long-term value price there at the 270. Still not too shabby. If we can get some support, it's starting to show some support here at the 90, where it has before. And now that we're on the north side of this 270, which just now left its own Bollinger Band river and crossed to the other side, that's not a bad looking place for it to continue to find support. So I can make the case for the long side in Cisco here. Intel and Coke to finish this up. Intel up and away. Long-term goodness in Intel. That nice big gap up, leaving it all behind. It's pulled back nicely into the edge of the floodplain here, and this gap. It has failed to fail for 3 days after the big gap up. So if we get a break above the real body here, above 30, off it goes. And then finally we will look at Coca-Cola. Looks good. Breaking out of the sideways quiet channel after a little head fake. Up it goes. Breaking out of that channel is nice. And here's what we look like on the price and the RL10 relative to the 270. The 10 just crossed the 30 and off we go, up beyond an all-time new high here at 41, or above that previous swing high at 41. So this looks like the beginning of a move. So that's the kind of symbols that this part of the report's going to get you into, whether you like the ones that are below the 270 and are trying to revert back to the long-term regression line, or which, if they fail further, can be candidates to short. And these that are the front runners, these are the ones that are exhibiting the most ATRs ahead of their own long-term trend. So the ones that are pulling the wagon harder than everybody else. So that's the regression line fractal framework and how we use it on the daily report. Take good care. Keep your wrist measured and your powder dry.